Hi guys, thanks for tuning in to another episode of the Ask Nugget Show, where I do my best to answer the community's questions. This week's first question comes from Peter on Twitter. It's got to do with mass adoption. So he's going overseas to Timor at the end of the week, and he's going to have the opportunity to sit down with some government officials. He'd like to start a conversation with them about the opportunities that crypto and blockchain technology can present for a country like Timor. So a lot of people don't realize that 2/3 of the world doesn't have access to banking services. Now, just because they don't have banks doesn't mean that they're living in the Stone Age. Some of these countries do have early stage internet, phones, smartphones, and the biggest benefit that Bitcoin is going to allow is financial services and getting rid of these remittance, Western unions that charge 20%. So think about that alone, 20% benefit going back into that economy or to the individual. So that in itself is going to liberate those countries in a lot of ways by cutting out the middleman. I guess the other things that blockchain allows for is record keeping. So we saw recently India are going to put all birth certificates on a blockchain. We've seen land titles. So all these things where there's disputes in some of these countries and there's no way to prove, well, this was my land, it belonged to my family. Once we have all that on a mutable ledger, such as blockchain creates, that's going to change a lot of that. So all those basic benefits and just highlighting the clear savings that it's going to present for the individuals, the economies, and it's all very easy to do now with just apps on basic versions of phones and so on. Second question comes from Trevon on Twitter, and he's asking about whether or not now's a good time to buy. Is the bottom in? If you've got money aside, what should you do? And guys, we pretty much get this question from people every week. We can't give financial advice. I'm always just trying to pass on what I've learned over the past 6 years in crypto. Dollar cost averaging is probably the easiest way, where you buy a little bit each week. Hopefully it bottoms somewhere during that time where you're dollar cost averaging, and you're going to get within a percentage of the bottom. Because guys, if 1,000 people out there are all trying to pick the bottom, the chances are maybe one of them will. So everyone thinks that they're going to pick the bottom to the dollar, get these huge gains. It doesn't work like that, okay? If you ever get within 10 or 20% of the bottom and the top, you've done really well. You're trying to capture those big moves, and the easiest way to get anywhere near the bottom or the top is just by dollar cost averaging. So if you've got $1,000, buy $100 a week for 10 weeks. Maybe if we have a huge big down move, maybe you'll buy $200 worth that week and not buy some the following week unless it goes lower. So just trying to get that average price is probably the easiest way to do it. Congrats to anyone that's been patient and they've still got some money on the sidelines. The other option is waiting for the bottom to come in. Now, if you think it's going to continue to go lower, have a number in your mind, because even though you might think, I'm going to wait till 5,000, what if it goes to 4,000? Again, dollar cost averaging is the way to go. There's services out there like Get Paid in Bitcoin, where you can set aside $20 or $50, whatever you want, to come out of your weekly or fortnightly wage. So you're automatically dollar cost averaging. And I know a lot of people that have used that service, it's been around for 4 or 5 years now, are very happy with the average price that they've got over that time, rather than having to fuss about buying it themselves as well. The next question comes from Andy on YouTube. Should we be concerned about Chinese crackdown on those projects? So we have seen another recent government crackdown. Andy's saying that he's heavily weighted towards Chinese projects, and it's pretty worrying. So I guess the advice I would have was, I like to diversify. So yes, there's some fantastic Chinese projects out there, but think about that risk to reward. Last year we saw huge run-ups in some of the Chinese projects. Most people are probably familiar with Neo, but equally that's probably come crashing down in this correction harder than any other project. So I guess the China aspect is risk to reward. Yes, there's a huge population there. I've spoken about how much it's going to boom there if it gets government approval. Now, some projects are trying to cozy up to the government, and we're seeing partnerships being formed. Keep an eye on the news, their Twitters and their Reddits, because they're going to let you know if the government is working with them. So yes, it's a huge risk. That's why you need to be diversified. If you've got all your portfolio in Chinese projects, what happens if the government continues to crack down even further, and none of them are allowed to develop and flourish, you're going to be so frustrated with yourself if everything else is going well, but you're too heavily weighted in Chinese projects. So do your research, be very selective. There's some great projects out there, but personally, I would never have them as my entire portfolio. It's just too risky, because we see what's happened. Recently they've cracked down on banning even crypto meetups, banning more websites. Obviously, they don't want to be seen to allow crypto to be running their economy or determining how people can get money in and out of that country and weaken their own currency, the yuan. Next project here comes from Paul on Facebook. He's asking for my thoughts on the big differences we see between value and price in crypto. So much comes from hype and perceived popularity, which is a fantastic comment. Why so many good projects overlooked? This is a really interesting one, because last year we saw some projects that I consider to be pretty ordinary have the biggest run-ups in price. Now, that's because of a few factors, but look at this space. Look how young it is. It's full of retail investors, mum and dad investors, people that are just flocking to whatever they see as the most popular on social media. And that just shows you how far away we are from these markets maturing, I guess. But probably those projects that had the biggest run-ups based on nothing but hype have fallen back the hardest as well. So it's a crash back down to reality. And some of the good projects that have held up the best, it's because they have something to fall back on. So they've got basic demand because people are using that crypto asset or their blockchain, or their teams had good announcements. They've got a working product. They're forming partnerships in that industry. All those things form a cushion because there's some basic intrinsic demand there, and it wasn't just all hype. And we see that Wall Street cheat sheet where some of these have gone all the way up and all the way back down because it really was just trading on emotion. So some of the early stage projects that we've been really keen on lately, it's because they've got a strong team with experience in that industry. They've got a working product that's either out or out very soon, and the industry they're disrupting is a multi-billion-dollar industry. So if you ask yourself those questions, again, the working product one is just such a huge part because it automatically puts demand in that price. And yeah, I don't think the next run-up is going to look the same. I think we're going to see more and more securities tokens, which means you're going to have that more mature investor from the traditional stock background. So I think it's going to be very different in the next run up, and I don't think you're going to see Wall Street money go into projects that are just all hype. And yes, hype projects that have got a lot of money in the bank can buy partnerships here and there, and that again can lead to short-term pumps, but over the medium to longer term, it's going to be about your working product and your actual development, not just hype. So Paul, yes, we have to be patient, but I think time will tell and the good projects will always prevail. So just be patient. The final question comes from Jason on YouTube, and he's asking about the safest way to margin trade. Now, margin trading is very dangerous if you don't know what you're doing and you're new to all this, and it's readily available, which is probably why it's even more dangerous. And yes, you hear all the good stories about people that are making a fortune, but people don't really tell you the bad stories. So there's what we call survivor bias, and so everyone wants to get in there and trade, on BitMEX with 100x leverage and turn their $1,000 into hundreds of thousands of dollars of profit. But you don't hear all those stories about the 90% of people that got wiped out and burnt and then not coming back. So Bitfinex allows you to margin trade on about 3.5 times leverage at the most. As I said, BitMEX allows you to trade on 100x leverage, which is very dangerous on Bitcoin, and then down to 50, 20, and on some of the smaller coins available there. But the good thing about BitMEX is that it has a practice account. So you can go and have a play around with pretend money and get used to it. I'd recommend doing that for at least a month or 2 months until you're really comfortable with your strategy and it's repeatable, because too often people either go there and they get lucky the first time and they think they're just going to make money, or they get burnt and they lose their entire account in their first 1 or 2 trades, and they wish they had have gone with a practice account. So definitely a practice account, definitely practice. Think about who's on the other side of the screen, guys. Do you think you're just going to waltz up to the world of traders out there, and some of them, the good ones that have been there for years, they've got way more experience than you? Are you just going to waltz up and start making money and beating everyone? Because on every side of the trade, there's another trader that's probably more experienced than you. So unless you think that you're going to be better than everyone else from day one, you're going to lose money. And that's probably the biggest thing that people don't get in their heads. They think they're just going onto a website and they're going to trade and they're going to make money. They forget that on the other side of that screen is a trader that's better than them, that's waiting to take that money off them. So practice makes perfect, guys. Again, awesome questions this week. Thanks to everyone that's writing in. I'll talk to you again soon, guys. Cheers.